Good morning and welcome to The Daily, your go-to breakdown of what's moving markets around the globe. It's Wednesday, August 13th. I'm Salim Kanat, a relationship manager here at Moomoo Australia and New Zealand, and we've got a lot to unpack today. From Wall Street highs to renewed local confidence and some big names reporting across Asia today. So let's get into it. So US stocks kicked into high gear overnight, with all major indices closing solidly in the green. The Nasdaq Composite led the charge, jumping 1.39%, and the S&P followed closely at 1.1%. Both hit fresh all-time highs, matched by investor sentiment. So why the surge? A mix of steady inflation data fueled expectation that the US Fed will cut rates next month. Current market odds put the rate cut at a near certain 95%. The thinking here is that inflation is inching up, but it's not out of control, giving the Fed a bit of room to ease. And geopolitics may be giving markets a little extra lift too. Markets are watching closely as the US President Donald Trump prepares for a meeting with Russia's Vladimir Putin, with whispers of a possible Russia-Ukraine ceasefire. Tech stocks were the big winners. Meta and Broadcom rose around 3%, while Semiconductor's names soared even higher. Intel, among others, jumped more than 5% overnight. These chip makers are particularly sensitive to interest rates, so any talk of cuts set them flying. Elsewhere, US airline stocks rocketed higher, with United, Delta, and American Airlines all up 10%. That's thanks to July data showing a rise in airfare prices, a sign that demand is still growing strong. And in the metals space, aluminium stocks got a boost. Alco climbed 7.4% on speculation that the US might reduce tariffs on the metal, a potentially big win for the sector. It's clear right now, almost all positive news, whether it's economic, political, or sector-specific, is enough to get money flowing back into the markets, especially in tech. Despite the lofty valuations of tech stocks, investors are betting big that rate cuts and stabilizing inflation will keep the rally alive. Back home, the ASX 200 had a solid session yesterday, climbing 0.41%. And that's just not the sugar rush from the RBA's recent rate cut. Investors are taking real comfort in signs that inflation in Australia may finally be cooling. Mortgage holders are breathing easier. With borrowing costs nudging lower, we're seeing capital start to trickle back into the market. And the RBA's 0.25% rate cut might have been expected, but it's helping turn around the disappointment from no cut last month. Still, the RBA's tone remains cautious. Uncertainty both at home and abroad continues to linger. Looking ahead, Asian markets are poised for a bullish open. ASX 200 futures are pointing up at about 0.2%, and every local sector looks set to join the rally. Today's a big day for earnings, both in Hong Kong and in Australia. In the SAR, we'll hear quarterly results from heavyweights Tencent, Geely, and Lenovo, all of which set the tone for tech and auto sentiment in the region. On the local side, CBA just posted full-year results this morning, showing a record profit up 4% year-on-year. And that was in line with the expectations. IAG Group reported a 50% surge in net profit, sending its shares up 4% in pre-market trading. And Evolution Mining more than doubled its profit from last financial year. We'll see how those results play out in the markets today. So to sum it all up, optimism is flowing across global markets, from Wall Street highs to an Aussie rebound amid strong earnings results. For now, momentum is on the bull side, but as always, watch for the unexpected. One meeting, one inflation print, or one geopolitical twist can turn the tide quickly. Well, that's it for today's edition of The Daily. If you found this update helpful, please be sure to follow and share, and we'll be back tomorrow with more market-moving insights. Thank you.